let me show you what the rules are, guys. First of all, both touches must be on the zone. All right, we get both touches on the zone. We have here. We have a touch on the zone. So we have a touch here. Market falls, comes back up and touches it again. Right? Okay. The second rule is we want to see, it can be between 6 and 10 candles between touches. I would say at a minimum of 6 candles between touches. It's better really though if it's 10 or more. Okay? Oh, I just messed that one up. Whoops. Oh. I put the wrong thing in there. Okay. So number 2 is a minimum of 6 candles between touches. What do I mean by that? Well, when the market touches our zone, how many candles print away from the zone? Well, we would say that these 3 candles here touch the zone. This one, that one, and that one. So we have 1 candle away, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles away, 12 candles away, and then the 13th and 14th candle hit the zone here. All right? So certainly we had more than 6 candles between touches. Ideally it's 10, but some, if it's 6, it'll fly. So that's that one. Now, the next thing that we want to see is we want to get what's called a trigger candle, or basically the candle that kicks off the trade. And what that looks like is first of all, there's 2 types of trades we're talking about today. There are what I call moolah trades, which are double tops, which this one fits the moolah, these 2 touches. And there are whammy trades, which fit, whammy is the double bottom, okay? Which is what we saw on that 1 hour pound chart. So we want to see 6 candles between touches, and we want to see both touches hit the zone, and then we want to see a trigger candle. A trigger candle for a moolah, so these are going to be the rules for the moolah, okay? So everything is bearish. It's a bearish setup. Trigger candle is a big bearish candle, right? It's a big bearish candle. That's what it is. So if you see this candle and you think, well, this is pretty bearish, but you might look at it and go, I don't know about that. Like, the close was 1.6162. The low was 1.6118. Wasn't a bearish enough close. And the candle before it had a bigger body. Maybe I'm not interested in this one. I'll tell you what a bearish candle looks like, Michael, because this is a good question. Basically, there's 2 types of candles that are bearish. One would be a candle that's not tiny. In other words, this, doesn't have a lot of wick to it. It's mostly body. Like the best example of a bearish candle here would be this one right here, this red one, that one right there. That's a great bearish candle. This one is also a bearish candle. This red one that closes basically on the low at 61.53. And then this one right here, which is the one after it. And the reason, again, is this is a big, long body, very small wicks, and it closes basically right on the low. These are the 3 best bearish candles that I can see in this area. This one, that one, and that one. Now, unfortunately, those candles have not printed over here. So we have to wait. So let's just say that we did, because I probably wouldn't take it based on this red candle. That would not be an alert candle or a trigger candle for me. So I'd actually wait for the next candle. Let's see what the next one is. Nope. The next one is no good. And you can see that because it's not a red candle, right? Oh, the other thing I forgot to mention is that we need to have the second touch is lower than the first touch. That's a very important rule. In fact, second touch is lower than first touch. And so the fourth rule should be the trigger. So let's just change that. Okay? So second touch is lower than first touch. And so let me show you what I mean by that. This first touch up here, the highest candle was at 62.59, right? Now over here, at the second touch, the highest candle is at 62.55. So it's 4 pips lower. The highest touch is 62.55. The highest touch is 62.59. What that means is this qualifies as a moolah top. Both touches hit the zone? Yes. Boom, boom. 6 candles between touches? Yep, sure are more than 6 candles in here. The second touch is lower than the first touch? Yep, it just made it by 4 pips. And we get a trigger candle. So far, we don't have a trigger candle. So what this means is sometimes what you'll see is you'll see all of these things line up, and then the market will explode and bust out and go beyond it, and it will actually break out, okay? But when that happens, you usually will not get what's called a trigger candle. This is still not a trigger candle, right? This one, it's a nice little red candle. Okay, now we're getting interesting because this candle's closed lower than all of these candles over here. But let's just say we're still not interested. Let me show you what I mean. See how this candle is closed right here? That's the lowest close we've seen since the market has come up here. And what that means is if we go to the line chart, you're going to see the line chart starting to bend down now. It's looking like it might fall. But let's just say that even though this is the lowest close here, it's such a tiny candle, I'm probably not going to say it's a bearish trigger. So let's just wait for the next one. There it is. That's our bearish candle right there. Now, unfortunately, we've really moved away, from the top. But at this stage, I would say, okay, we've got our bearish candle here. We can go ahead and take this sucker. And what I would say is now we're off to the races, right? The stop loss, which is the number 5 here, is above the first touch. Above first touch. Not the second top, but the first top on the double top. So it's actually up here. Let me draw it in so you can see. It goes right here. Right there. That's our little stop right there. So we'll make it, red. Stop goes right there. Now, ideally, we can get in on the close of the trigger candle, or we can put a few pips below that trigger candle, we put a sell order. Now, where would be the target here? Target's really easy. It's a very simple target. It's going to be down here at these recent lows. Basically, where this zone is here. This zone should probably be scooched up a bit and should be somewhere in this area. So this would be our target. So I'll go ahead and make that green. That's where the profit should be taken. Whoops, I made the line green. That was a mistake. I want to make this green. Yeah, that should be green. Okay, cool. So that's our target. Stop loss up here. Now, the second target's going to go where? Second target for me on this one goes right here. Right here. See where the market topped out here and it topped out there? That would be my second target. So I would actually extend this all the way across. And I'd be looking at somewhere around 57.30 or so. Right around 57.39, 57.35. That would be my second target. And what I generally do is I move my stop to break even after it hits the first target. Yeah, it's not very good reward to risk, Matej. And the reason why is because the the trigger candle was so far away from the price. And so you might not want to take this, right? You might say, you know what? I don't want to take this because I'm risking, on this one, we're risking 219 pips to make 138 pips, right? So you may not want to take it. Now, or you might want to just go only for target 2. Target 2 is 300 pips away, and you're risking 219 pips. So that's another option, right? So let's just see what happens here. Obviously, the market does go lower than our alert candle, our trigger candle, and then it sits here, and then bam, it hits the support level right here, takes out the target. We can move the stop here to break even now. And then it comes back up and hits the break-even stop. If you were targeting target 2 down here and you move to break even after the market hits this first zone, you also would have been stopped out, right? So either way, now you can see it's come back down here. Maybe it's going to break through and go down there. No, it is a huge bullish candle, and now I think that's where we're at right now. We're up here, and we've basically made a really strong run at this level.